Morning, everyone. Nice that you join us with our webinar, Buying a Home in the Netherlands. And in specific, we focus today on new builds on plan, so pre-construction new builds. I have the pleasure to welcome today Andrew from Viisi with us, who is going to explain a little bit more about financing and of course about mortgages that are related to buying a new build. And you will also see my colleague Ludo, who is going to follow up on all the questions that you may have and that you can put always in the chat. And then at the moment that we finalize the presentation, we will try to answer the most of those questions totally at the end of this webinar. So thank you. And we will start right now. For your information, my name is Philippe. I'm the business unit manager with Expat Housing from the buying team. I'm originally from Belgium, proud father of a daughter of 3 that thinks sometimes that she's 10 already, which gives hilarious situations. I bought a home in Netherlands some 3 years ago, and I constructed also one time in my life a new build, so I know a little bit how and what to do when buying and constructing a new build. And then we have my colleague. Maybe Andrew, you can present yourself a little bit.
Sure, thank you, Philip. Good morning, everyone. My name is Andrew. I work as an expat consultant at Viisi Mortgages. So if you need a mortgage, you know how to find us. We work with a team of 60 persons within Viisi, so quite a large team, which is also growing rapidly. I have been born and raised in the Netherlands. I have Egyptian parents, so that's why I have this lovely beard, as you can see here. And quite some exciting times for me as well. I just got married on the 23rd of August and got the keys to my property on the 25th. So it was quite a crazy and hectic and also lovely period. But I've been in the same phase as the most of you will be in the future. So glad that I could join as well today.
Thank you, Andrew. Then for you guys, we're going to run through the agenda first. We're going to introduce a little bit new build in the real estate market, speak about some pros and cons about buying a new build, give some market information as well, of course, very interesting, relevant, but also important to know today where is the market at and where is it going to. Price and costs of new builds, the buying process itself. We speak about the 5% rule and the guarantees that apply. We speak a little bit about listings, and for sure as well, we will touch the topic of the financials and everything that is related to that. Of course, as I said, afterwards, it's time for a little Q&A. To introduce our team with the Expat Housing Network, you can see them over here on the screen. What we always say is, yeah, of course, you will speak with one account manager in specific, but there is a whole team behind and around. Yeah, greatness is achieved in the agency of others. So it's not only one person that is at your service, but it's a whole team in the end that provides the service that you need and that you're looking for. You're looking for a new build, then we are going to see a little bit, you have the choice to buy an existing one or to buy a new build. What are the differences over there? What are the pros and cons? We can say that for sure, when you buy a new build, one of the positive points about it is that you can always finish and always search for something that is totally your own taste. From the start of the process, you can make some specific choices, but also afterwards, it's like a white canvas and you can fill it in yourself. That's of course a very positive point if you look at specific new builds. The energy label of the buildings on today, maybe it is not that hot topic in the market to say, because the market is just that bullish at the moment that people tend not to see to the energy label anymore. I believe going forward and in the future, this topic will become a lot more relevant. And of course, if you buy a new build, it has the latest technologies on insulation, on energy levels, and all other stuff that apply. So energy label of a new build is very good, and I believe in the future it will be more important than it is today. Of course, You buy a new build, so the maintenance is limited. That's also interesting. You don't have to care too much about defects or broken things around the house. You can just enjoy. There is no transfer tax that applies to the new builds. We will see later today that there is VAT that applies, but it's part of the price that you pay for the new build itself. And there is no appraisal a lot of times that apply. Also, that we come later to that topic, but it makes a little bit of a difference when financing your home as well. We have a lot of positive topics. However, there are also some negative elements to mention. The first thing is, you cannot view the property. A lot of times when you buy a new build, it's only some paper that you get and some nice plans, but you're not able to visit the property itself. That's something you need to take into account. You may need to make a subscription to be able to buy the properties, because there is a lot of interest from people, and only buying the property the moment that it's constructed, yet that it's too late already. So you need to be able to subscribe, and that's sometimes a little bit of a battle. You need to take 1 or 2 years before the delivery of the premises. It depends a little bit, of course, how fast all conditions of the contract, purchase contract, are being met, and of course how fast they build. But for sure, you need to take into account a certain period where you will not be able to move to the property yet, because they are still building it. There is less negotiation on price possible. We will talk to that a little bit later as well. You have some possibilities to talk about the details of the finishing of the house to say, but the price itself, often it's less the case that there is a lot of room for negotiation. Maybe if you buy the first or the last one, that can be a little bit different, but in general, there is less space for negotiation. And of course, also important to mention is that you need to take into account the double cost of housing. You have your existing home, of course, you bought it or you're renting it at the moment. And of course, when you take then the mortgage for the new build, they are still building it, but at that time you cannot move in and you will have to pay a double cost. Yeah? So that are the pros and cons. Always to consider for yourself what for you has the most weight in your decision. But then you can take well thought decision based on these specific elements. And then we're going to look into the market a little bit. I will provide you some numbers based on the last quarter. What do we see for new builds is that currently there are 7,400 houses for sale. That was for Q3, and that is minus 28% if we compare that on a year-to-year basis. We see that the average housing price is around 455,000 euros. That's plus 14% if you compare that on a year-to-year basis. And we see that, they sell quite fast in the sense that within 30 days, if there is a total new project, 30% of the apartment is already sold and 75% of the house is sold in 30 days. So the prices go up, the sales go fast, and the number of houses that are offered in the market is quite limited due to some specific reasons. One is the materials getting more expensive, but also in general, also for the permits, it's not always that easy to get all the projects with permits ready to start. And then you see here how when the evolution the last couple of years between 2015 and 2020, it's clear also for existing houses that prices went up, and we see an index of 163 between 2015 and 2020. So clearly, in general, house prices go up, and also for new builds, those prices go up. And then I would like to inform you and come back to the specific reasons for this increase, because we see that there is a bullish market, and then the question is always, what is the reason for that? The first one is, of course, fiscal benefits. We have the tax exemption, and with the new build, you don't pay transfer tax. Of course, there is VAT included. You have the interest rebate, that interest can be deducted from your salary before they are getting taxed. That's, of course, a positive element. And there are no capital gains whenever you sell your house yourself. And so the gains you have with buying and selling, you can just invest them in a new property. Of course, we have to say that On today, there is a lot of discussion about, and the question is also if the new government needs to do something about it, and maybe need to cancel those interest rebates or tax the houses a little bit more than they do on today. But until today, that's not the case. So also the market is not taking into consideration yet what maybe can happen somewhere in the future. We also saw low interest rates, and Andrew will come back on that as well. Of course, if money is not that expensive, then a lot more people are going to use it and also pay a little bit of a higher price because the cost of that mortgage is lower than before. We see high rents, so a lot of people that are renting consider to buy a property instead of renting a property, in the sense that often we see that when you take your mortgage on 25 years and you see what you need to pay as a rent, you can also just buy your own property of that same amount. So in that sense, you build up equity, and it's very interesting to buy into today's market. And then we see, of course, the lack of supply. I told you already, in general, there is a lack of supply in the Netherlands. There are a lot of people calculating, but it is between 250 and 300,000 new houses on the supply side that need to come to the market and that are not there on today. And of course, it's the economical rule: when you have a lack of supply and a lot of demand, then the prices go up. That is normal. And then a last thing in specific for new builds is also the cost of materials. Due to COVID, due to other reasons, we see that the price of materials, that they go up and went up already in the past, but still go up on today. And that, of course, somebody needs to pay that. And it means as well that a little bit of that rise of materials cost is also calculated in the new sales prices. Then we come to the price and the cost in specific of a new build. As you know, maybe a lot of people sell the new builds with the sentence that it's very good because you have an all-in price. When you buy a new build, it's free by name, vrij op naam. And that means that there are some costs that are included in the price for sure. The first of that is the notary fee of the transfer deed. I clearly mentioned it's the notary fee of the transfer deed that is included already in the selling price. The notary fee of the mortgage deed, that's an extra cost you need to calculate. Then you have also the registration in the cadastre, that's also included in the all-in price. And you have also the VAT on the purchase price, including the land, that is also included in the all-in price. Yeah. So that's a good thing to take into account, that those things, notary fee of the transfer deed, registration, and the VAT on the purchase price are included in the purchase price. I have to say that you always have to check on costs as well, because there are some other costs that will apply. And you also need to take into account some extra works and some finishing. But we come to that in the next slides more in detail. These are the extra costs that can apply. So as I mentioned, no transfer tax. That's important to know. With an existing building, there will be calculated transfer tax, or 0% where you're exempted, 2% or 8%. For new builds, that doesn't apply. There is VAT of 21% that applies on new builds, but that's included in the purchase price that is offered to you by the seller. Yeah. The registration in the cadastre is also included. The mortgage deed, as I said already, the notary costs that are related to that will also be included. Transfer deed, the transfer deed is included, and the mortgage deed, of course, you need to pay. A mortgage or a bank broker that will help you to secure your finance, that's also a cost you need to take into account. It depends a little bit, of course, which party you're looking at and which services you're going to ask from them. You also will use a real estate agent to help you buying the premises. In a normal way, this is 1 to 2% of the purchase price that is calculated for this. It depends a little bit from provider to provider. We don't work with a percentage, but with a fixed fee, but it depends on the real estate agent that you're going to use as your buying manager. Then, as I said, normally appraiser applies as well to get your finance of an existing building. For a new build, this is not the case. As they say, okay, we know the price and it's totally new. The market price, the purchase price that you're going to pay will also be used as the value for the property that is the base for your mortgage for financing the property. Yeah? There will be maybe some really exceptions if they see that the price compared to the region where you're looking at is totally out of range, then it can be that they ask for an extra appraisal, but it will really be the exception. Normally, you don't need an appraiser when you're going to buy a new build compared to existing properties where you need that one. That is a big difference. And then what is important as well to take into account is the technical experts. The technical inspector can help you at two different moments in the process. One is whenever you receive all information, that will be a lot of legal information, but there will also be some technical descriptions in there. For that, you can use a technical expert who will then explain to you a little bit what that specific technical language means when you're going to visit the property yourself, because it's not always easy to translate. And also very important, at the moment that you have your final delivery, you can always let you assist as well by a technical expert. And over there as well, we advise to do that because that can make a big difference. For the rest, you still have the interpreter who goes with you to the notary. Maybe a bank guarantee you need to provide, and you have also the NHG that can apply. That is somewhere like an insurance for properties that are below the amount in 2022 of 355,000 euros. There is a little cost that applies as well for that. If you like to have more information about that, you can always contact us. Then we see the price. It's important to know for a new build, we'll pay it in two different moments or in more different moments. The first time that you pay a part of the price is when you will sign the transfer deed with the notary. At that moment, you will pay the price of the land, and you will also pay all costs, of course, that are related, and the part of the building that is executed and due at that moment already. Yeah. Most of the time, it's like the price of the land and the cost that you pay at that moment, because the building then still need to start with that. And then at the transfer deed, the notary asks you to transfer that part of the purchase price already. The rest of the purchase price will be depending on how fast they build. If a certain element of the building is finished and is executed, at that moment, also the purchase price is due. And at that moment, you will need to transfer the amount as well to the notary who will transfer to the seller. Yeah. These building deposits, as it's called, that's the amount that you will receive from the bank and that you will pay in parts whenever a part of the building is constructed, will be like 7 to 10 different tranches in your contract and different timings whenever you need to pay them. And of course, always only need to be paid the moment that you can really see that the part of the building is constructed. Then we go to the process of the buying of a new build a little bit more in detail. The first thing, of course, that you need to do is to search for a house and to subscribe to that. We will later in this presentation see where you can find different listings. It is important, of course, to subscribe as soon as possible. At the moment you subscribe, normally there are no strings attached. It's normally like first interview with the seller or the developer, and then they will explain you a little bit more about the project. Of course, it is important to get on that list because as there is a lot of demand, if you don't get on that list, then it can be very difficult to buy a house or a premises in that project. And as I said, don't wait until the moment they start building, because then probably it's too late, because most of the apartments or houses will already be sold at that time. The first thing you do is, as I said, to have a meeting with the seller or the developer. Of course, if you apply for our services, we will attend those meetings together with you to ask the correct questions, of course, and to point out a little bit as well the points of attention that can be in place for that specific property that you're looking at. After the meeting with the seller or the developer, they will have shared at that moment itself, a little bit later or just prior to the meeting, all info and documents about the property. I have to say it's a whole list of elements and documents, but it goes from, of course, some legal documents, the purchase contract or the drafts of them and the drafts of the transfer deeds, over the technical description that you have from the property, some 3D rendering that you will get, and all other relevant information about the project that is important for you to get an understanding of the property quite well. And of course, there will also be a price list included together with that. As I already explained, at that moment, it can be useful to have a technical expert in place that can review together with you the technical description of the premises, because a lot of people say, yeah, I want to know how it looks exactly when I'm going to live in that property. But you will only receive some renderings. A lot of times there's also like a little a remark that the renderings are at the best of capacity of the seller or developer, but will maybe not meet totally the real property that is built. So for that, we always suggest take a technical expert, and for some 50, 60 euros, he will do the review with you and explain all technical elements a little bit more in detail, that you can make a clear view on what to expect on the real premises afterwards. Of course, it can happen that after all that review of the documents, you still have questions, or maybe have new questions as well. Then, of course, we schedule an extra meeting with the seller of the developer to go through those questions again, and to see what is the response to that, or maybe to find some solutions if there is something that needs a solution from both sides. After that, it's up to you to make up your mind. And if you say, I want to go forward, you will sign the purchase and building contract. Of course, the seller will do the same. If you sign the purchase contract, you have a cooling off period that applies. Normally, the legal cooling off period is 3 days. What we see in the standard contracts for new builds is that you have 1 calendar week. So that is the period where you can still cancel the contract without paying any penalties. Yeah. After that moment, or there needs to be a specific condition in the contract, or you need to pay a penalty whenever you cancel the contract without due reason. When the mortgage or when the purchase contract is signed, then normally you will have contact with your mortgage provider as well, to secure the mortgage, of course, and to be sure that the mortgage is in place at the moment that you're going to the notary to sign your transfer deed. There are some rules to be taken into account on that applying for a mortgage, in the sense that the transfer deed will not always happen immediately, and also the start of the works will not happen immediately. So you need to take into account that there can be a timing of 9 months after signing the purchase contract before the work start, and that can also have an influence on the moment that your transfer deed is signed. It will all depend on the conditions that are mentioned in the purchase contract, going from the developer still needs to have the final permit, or other conditions that are similar. And therefore, it's very important when you speak to your mortgage advisor also to make that clear, and to have an offer that is valid for the time needed. But Andrew will talk to that about that topic a little bit later as well. After signing of the transfer deed, you will receive the building depot. So it means that you can pay all the amounts that are necessary for the works that are executed. Of course, as explained already, the part of the purchase contract and the part of the land that you buy, and maybe existing buildings on that land already at the moment of signing of the transfer deed, that's the amount you will already have paid with the notary at the moment of signing the transfer deed. Then we have the building works that start, depending on the project, of course. It will take around 1 year, maybe a little bit longer. But yeah, that's a little bit a normal period to take into account, 1 year, 1.5 years for the building works itself. And then when the building works are almost finished, it's time again to call your technical expert for the delivery of the project. The delivery of the project normally is 2 parts. It's the provisional delivery, which is not official, but it's just go around together with the developer on site or with the contractor on site to see what is finished already and maybe some elements that needs to be finished. Then they can still do something before the final delivery. And then you will receive a letter from the contractor to come on site to do the final delivery. And at that moment, of course, it's the official handover. After that delivery, you will receive the keys, but you will also bear the risks of the property. So it's very important at that moment to make a good report of that delivery as well, where all elements that are relevant are mentioned and are mentioned in detail. And then after the delivery as set, you can move into the property, you can start your finishing. If there would be some defects that would still apply on the property, you still have the right to claim for a guarantee. We come to that in the next coming slides. But let's hope that there are not too many defects and you can start just doing the finishing of the home and feel comfortable in your own place. That's the process of the buying of a new build. And then we come to the 5% rule and the guarantee. As explained, very important. When the delivery is done, then you still have the right for some guarantees or some defects that needs to be finished by the contractor. And that's what we're going to explain you a little bit more in detail on the next coming slides. The first thing that applies is the 5% rule. Yeah, the 5% rule, it's a legal right of the buyer. So it's your legal right to claim 5%. And how does that work exactly? When you need to pay, for example, the last 10% of the purchase price, totally at the end of the building process, it can be that there are some elements that, were not finished yet, were not totally okay. Then you can decide as the buyer to say, okay, I pay 5% to the builder because I had to pay the rest of the 10%, and the other 5% I pay into the account of the notary. Yeah, the 5% will be blocked as a deposit with the notary until all the problems are solved. The contractor has normally 3 months to make everything okay, and then when everything is solved, then the 5% will be released. If that is not the case, of course, you need to see how to find an agreement with the contractor. And if it doesn't work, you will need to direct yourself to the court. Yeah. It can also be that the contractor already provided a bank guarantee to the notary before signing the transfer deed. At that moment, of course, it's not your right to keep 5% in your own account or send 5% to the notary as a deposit, because you have already the bank guarantee that is there to be somewhere securitization of your rights with the notary. Of course, whenever there are defects and you say, okay, these defects still needs to be solved, then you also need to write, it's best to do that always in written to the notary, that you claim that bank guarantee, of course, for the defects that were not solved until that moment. Important to say is that for apartments buildings, also the 5% rule applies for the common areas. And if there are defects after delivery, as I said, don't free the amount equal to the defect, that's clear. But if you say the defects are not 5% of the purchase price, but only 1% of the purchase price, then it's better not to free 1% of the purchase price and pay the other 4% as normal. And why do I say that? Because on the non-payment, of course, of the purchase price, you will have to pay interest rates. And it will only be allowed also when you go to court that you don't pay that amount of the price, which is equal to the defects of course that apply on the property. Yeah. So very important, you have the right to keep something with you or not to pay it immediately to the seller, but only to the notary. But of course, it needs to be in line with the defects that are still going on in the property. And then we come to the guarantees that apply. So the first one is the 5% that applies until delivery and delivery plus 3 months. But then after those 3 months, we still have some other guarantees that apply. And contractual, you have 6 months after delivery, you have the right for maintenance on the total of the property. That means that when there are still some defects that arise at that moment, everything was delivered and it seemed to be all right, but you're going to use the property, then it seems that some functions are not working. You still have the right to claim maintenance of those elements with the contractor. After 5 years, you still have the right to claim hidden defects if they would arise. And 20 years later, you still have the right to also claim major defects if they would arise. Yeah. So that are the standard guarantees that apply in the standard contract. If you're using the contracts of the insurance companies like Woningborg, SWK, or Bouwgarant, you also have an extra guarantee that applies above the standard guarantee. Also apply 3 months after delivery. There is normally a 6-year guarantee in general that applies over there. Some specific parts will have a shorter guarantee period, and major defects will have a 10-year guarantee extra to the guarantees that applies already in the standard contract. Yeah, but then you need to read a little bit the general conditions that apply for Woningborg, SWK, or Bouwgarant, depending on which insurer was used by your developer. And then also important, of course, we want to do the total buying process, but the first element sometimes is where to find all those listings. That's why I made a little list for you. You see the website nieuwbouwnederland.nl. On that website, you see for all the cities in the Netherlands, the latest projects that will start soon or that are going on at the moment. So over there you find the total list, I have to say, for the Netherlands of all different cities, a good overview of the new builds that are going to arrive soon in the market. Sometimes you can also, for specific cities, depend on a city website. I know for Rotterdam they have that. I believe for Amsterdam they have it as well. And maybe for some other cities they have that as well. So also the city websites can bring you an answer or help you in the search for that property. You have as well, of course, as a second bullet point, the project websites itself, and that are the websites that are made by the selling agents or the developers around the project. Sometimes have the name of the project itself. Sometimes you find the link on the websites of the developers. Funda.nl, they focus a little bit more maybe on existing properties, but also over there you can find new build projects. So also on Funda, you can search and see whatever project that pops up over there. And of course, the last bullet point, we also have contact with different developers and selling agents. And of course, you can always ask us as well if we knew some projects for some specific regions that will come to the market or are still on the market and where you're able to subscribe at the moment. Yeah. As I mentioned over here again, subscription conditions differ per project. So always good when you subscribe for a specific project, then check a little bit the conditions that apply on there. And then we come already to the financial part. I believe I will give the word now to Andrew to go forward with that part.
Thank you very much, Philippe. Of course, there are a few things to keep in mind when you look at new construction properties with regards to your mortgage, but also your own input. So these are a few things I'd like to discuss with you. Philippe has already mentioned some of them, but might be good to elaborate a bit more on that. Well, if you compare it with existing properties, you will see that with new construction, it's vrij op naam, meaning that there's no transfer tax applicable. Whereas with existing houses, you'll have some purchase costs to keep in mind. So normally your own input is a bit higher than if you compare it with new construction. I'll be showing you an example on the next slide. With existing houses, the market value that is determined by an appraisal report, which is actually an appraiser going to the property to see what it's actually worth. Might be in line with the offer that you put in. Sometimes it might be a bit lower. We don't see a lot that it's higher, but that's normally how that's determined. With new construction, mortgage providers normally assume the market value as of the purchase price plus any additional work that you'd like to do. So I'll get in a bit more detail about that on the next few slides. On the next slide, you'll see the comparison of your own input that it's required when you look at new construction in comparison with existing construction. Well, let's start with existing construction. I made it an easy example. Let's say you buy a property for 450K assuming that's also the market value of the property. Well, normally there's 2% transfer tax that's applicable, which is around the 9,000 euro in this case. Well, assuming some notary costs of 2,000 euro, you have to have an appraiser go actually to the property, which is another 800 euros. And then you see our fee and of course also the fee of Expat Housing Network, um, which means that your total cost looking at the purchase price and all the purchase costs are around the 467,000. You can only borrow 100% of the market value of the property with existing construction, meaning that in this example, your mortgage is limited to 450K, which actually means that your own capital that's required is actually a bit more than 17,000 euro. So a mortgage provider would actually like to see that you have that on your bank account already. If we look at the right-hand side with new builds, well, assuming the same purchase price of 450, there's no transfer tax, so that's already 2% that you save on. At the notary, you'll be signing the mortgage deed, so the property deed was already included, as Philippe was saying. Assuming that you also have a translator, as you can see, the notary costs are roughly, well, let's say 700 euros less. There's no appraisal report. And then again, you have our fees that of Viisi and of Expat Housing Network. So as you can see, your total cost would be 456.7. Well, again, your mortgage is limited to the value of the property, meaning that the own capital that's required is 6,700 euro. So as you can see, there's quite a difference in own capital that's required. So this is an easy example to show how this works. On the next slide, as I mentioned before, the market value of the property is determined by actually the purchase price. So it's quite easy with new construction. It's the cost for the ground and of course also the cost for the construction itself. And it's very, very important to double check whether there's any additional work that needs to be done. Make sure to double check that please with the selling agency as well, because normally what we see is that it could be that the bathroom isn't included. Sometimes a kitchen isn't included as well, or it's quite a basic kitchen that they put in. It might be that you want to upgrade that. You also have to keep in mind that normally you don't get the property already with floors in it and these kinds of things. So that's very important to keep into consideration the additional work that might be the case. How does that work? Normally you have to fill in something called a home improvement specification form in which you state what you're going to renovate and for how much. So that could be, let's say, a bathroom for 15,000, a kitchen for 15,000, and putting in floors for 10,000, for example. And the market value of the property is actually just determined by the purchase price and the additional work that you're planning to do. So they actually assume that the things that you're going to do as additional work is actually also fully of added value to the property. So that can also be financed in full. Of course, if your income lets you finance that at full as well. Whereas with existing construction, you can only finance the added value part, which is determined by the appraiser. Always make sure to double check that with the selling agency, how much is needed. Normally what we see in practice is that 5 to 10%, sometimes even 15% on top of the purchase price is needed to get the property as well. You would like to have it as your dream house. So always make sure to double check that as well with the selling agency. It can all be included, so it's quite easy to fill that home improvement specification form in. But be aware to be really advised about this. Otherwise, it might be that you have to increase the mortgage later on if the additional work was significantly higher. Meaning that you have to value the property again, have again advisory fees, which is something, of course, that we want to save on. On the next slide, I think this is one of the most important things. What you have to keep in mind with new construction is that you'll be having double housing costs. You'll be having your current rent or your current mortgage that you have to pay, but also the new mortgage, because you already start paying for your mortgage as soon as the construction period starts. So that's something what a lot of people are not aware of, is that you already start paying as soon as they start building. How does this work? Normally your monthly payment starts at the lower level and then it increases over time till it gets to the 100% of your regular gross monthly payment as soon as you get the keys to the property. So normally what happens, as Philippe already said, we'll normally pay the price of the ground immediately and also a part for the construction. and the remaining amount of that construction is put in something called a bouwdepot in Dutch, which is like a building depot. We also call it a construction deposit. And in that construction deposit, you actually receive interest on that part. Well, as Philippe was saying, normally you have 7 to 10 terms that you have during construction period, which are actually 7 to 10 phases that you'll have during the construction period. So for example, putting in the ground floor is a phase, putting in the second floor, finishing everything up. These are all separate phases. And every time you hit a new phase or a new phase is reached during that construction period, money will be extracted out of that construction deposit. And every time that happens, your monthly payment increases a little bit till it reaches the full monthly payment. Of course, you never know when which phase will be reached. Might be some delays. Sometimes it happens that they finish up a bit earlier, a specific phase. And that's why we always advise our clients maybe to be a bit more conservative. Assume that you'll be paying 80% of the regular gross monthly payment that we discussed during the mortgage appointment during the construction period. So always make a good estimation. Well, keeping in mind I'll be having my own mortgage or my own rent, 80% of the regular new monthly payment. Keep that in mind that you have to have that on your savings account, or you should be aware that during the construction period, which can take up 1 to 2 years, that you will be saving significantly less. That construction deposit is normally valid for a period of 24 to 36 months. And might be that if it takes a bit longer than, for example, the 2 years of the estimation, then on that remaining period, you will not be receiving any interest on that part. So always make sure to double check that. I just had some clients that I helped with their first property. They were interested in a new construction property as well. Looking at their situation, that had exactly the same amount available for the double housing cost, meaning that if they're, I don't know, if something would break down or they would have a leakage in their property at this moment, they would not be able to finance that. So always make sure to make these calculations for yourself as well. There are a few important things that you have to keep in mind. If the construction has already started, there might be some construction interest applicable. And what does that exactly mean? So as you can imagine, they already started building the construction, meaning there was already some money put in by the developer to already start the project, meaning that there might be some construction interest, like a fee that you have to pay since they already paid everything in advance. That could be quite significant. These are fees that you have to pay at the notary office. So as soon as you sign the mortgage deed, that might be that you have to pay that at once. With some mortgage provider, we can include that already in your mortgage, but you will not be having any interest deductibility on that specific amount. Philippe already mentioned, normally as soon as you sign the purchase agreement, you have a legal cooling off period of 1 calendar week, so you can back out of the process without any harms. And normally as soon as you've signed the purchase agreement, you will see that there is a financial clause. Normally that's with new construction around the 2 months, meaning that we as your mortgage advisor have 2 months to arrange the mortgage for you. If it cannot be arranged within those 2 months, then again, you can back out of the process without paying a fee or something like that. Something very important when you look at new construction in the purchase agreement are the suspensive conditions. And these are conditions actually put in there to, well, actually protect the developer and the selling agency. And these are specific conditions that need to be met before they can actually start building the property. So that's also something that you have to inform yourself about and ask the selling agency. Normally they say, well, we'd like to at least have sold 70% of the properties and we should have already attained the environmental permit to start building before we can actually start the construction of the property. Why is this important? Normally the suspensive conditions are around the 9 months. Sometimes we see 6 months, but normally it's around the 9 months. Why is this important? Because that means that your mortgage also needs to be valid till, well, actually the last day of that suspensive condition. So what you will find in the purchase agreement, for example, is the suspensive condition, which is valid till, for example, let's say the 1st of August of 2022. What that actually means that the mortgage that we put in motion for you needs to be valid to bridge that period. So what we have to keep in mind is that we choose a mortgage provider that has a long offerability to bridge that period. Why? Let's say you do choose a mortgage provider where this is a short period and you haven't been at the notary yet. That means that we have to reapply again. You have to walk through the whole process, paying again advisory fees. So that's something, of course, I would like to avoid. Ideally, would like to put everything in motion with a mortgage provider that has a long offer validity. How does that work? Let's say they do meet these suspensive conditions. So they have sold, for example, 70% of the property. They have, for example, also got the environmental permit. Then normally you receive something called the hooray letter, as in hip hip hooray, hooray, we have met the suspensive conditions. We can start the construction, which will start, for example, in 6 weeks. And as soon as these suspensive conditions have been met, then we don't have to keep in mind the long offer validity. So we, as your mortgage advisor, always keep in mind to have a long offer validity with a mortgage provider, or we look at mortgage providers where you can extend the mortgage offer. Might be that there are some extension costs. Sometimes this can be done free of charge. So this is really something important to keep in mind, and we can always double check that for you. When you already have a draft of the purchase agreement, we can always walk through these conditions to keep that in mind when we have our mortgage appointment. On the next few slides, well, of course, you can always make your own estimations when looking at how much you could borrow. I always say don't look at what you can borrow at max, but look at what you're willing to pay every month. So this is also an important thing. So you can always make your own estimations, but we advise people always to plan in a telephonic appointment with one of our mortgage advisors, in which we well, make an accurate calculation, a specific calculation for you specifically. This is a telephonic appointment which normally takes about 30 minutes, which is free of charge. So we can actually, well, discuss these details, maybe already have a look at the draft of the purchase agreement. So you have everything set. Back to you, Philippe.
Thank you, Andrew. Very interesting. What I like to stress maybe are some final tips and some points of attention. As we said already and mentioned already before, check on the double costs, on the extra works, on the timing, and do that together with your advisor, your mortgage advisor, because it's important that, of course, you can buy a property, but you also need to be able to pay it, and to be able to pay it over the long run, of course, until the construction is finished. So that is always the first thing that we say: look at your budget, but also inform yourself correctly that there are no hidden things that pop up the moment that you signed your purchase contract, because that would be a pity, of course. The second thing that we advise is consider a technical review of your documents. If you remember in the process, that's totally in the beginning when we receive all documents and we do the review of all documents. I know that on a legal way and on a financial way, and that's clear for everybody, how to interpret and how to take a decision on those specific topics. But the technical descriptions sometimes are really in the language of an architect or a technical engineer, and then to understand what that will mean in the end for your finishing of the house, which will be quite important, of course. Therefore, we consider taking a technical review as well. The cost is not that high, and it will help you to understand what you are signing at that moment, because you cannot visit the property, of course. The third point is also important. Check if the builder gave or gives the guarantee of the three companies that are mentioned. This means that you will have the 5% bank guarantee before signing the transfer deed, and that you're always a little bit secured for everything that goes wrong with parts of the building that are not finished properly. Then you always have that bank guarantee of 5%, which you can apply for with the notary. So check on that. Calculate the extra works. As Andrew mentioned as well, those extra works, they can be like 5 or 10% of the price. It is like the finishing of the kitchen, or a better finishing of the bathroom. You will most of the time also need to finish the floors in the apartment, and also the other finishing, of course, like lights and other things like painting and so on. So always calculate that extra work as well, because of course it's an extra price. It will not be mentioned in the purchase contract. It is normally after you sign the purchase contract, you will have a meeting again in specific with the sales team of the developer, and they will then go into detail for the apartment that you bought, which extra works you want. Do you want to have an extra element in the kitchen? Do you want a total different kitchen? Do you want an upgrade of your bathroom, and so on and so on? So be aware of that before you sign the purchase contract, that you made your own calculation, that you know what to expect. And then the last one, very important, is consider technical expert for delivery. That means, of course, that at the moment of the final delivery, at that moment, as I said, the keys will be handed over to you, and you take the risk of that property. So it's very important, if there is still something that needs to be fixed or something that is not totally okay, that it is mentioned in the final delivery report, as there will still be a period of 3 months where the contractor needs to solve all problems. And then, of course, the maintenance periods of 6 months that comes after that. So these are my main 5 bullet points, some final tips to take into account when you go forward buying a no build. And then shortly, a little bit about our services. If you are interested to go forward, you can contact us, of course. We will share this presentation and we'll also share some links. We charge a total amount of 2,999 euros, including VAT, where we only ask you for a deposit, and the total amount will only be invoiced to you at the moment that you sign the transfer deed. So when you were able to buy something, it's a no cure, no pay service that we offer. And you can read here on the screen a little bit what those services are. Of course, we will have a personal intake with you to see a little bit what is your personal situation. We can help you searching for new projects or new listings. Of course, you will have access to a specific buying consultant in our team that will go all the way with you from the search until the closing and the signing of the transfer deed, but also some support afterwards during the building process. We will attend the meeting with the seller and the developers, or if it are more meetings, of course, that's included. Review all the documents of the new build, and also have a short chat with you about it to see which information we received and maybe some points of attention we need to mention. We will also somewhere give you a price benchmark based on other properties that are in the market, and also what we see that is likely to be a reasonable price in that city or that area. Of course, we will follow up with the negotiations. I put it also offer on the project, but on today it's more like the asking price will be the purchase price. Of course, there is always room for negotiation. Also, what I said, with maybe some extra words, some finishing that can be included or excluded. Maybe if you buy the first apartment or you buy the last apartment, then sometimes there is also potential a trade-off between what you want to pay and what the seller is expecting. So that's something we can look at together. Of course, we do the review of all legal contracts together with you, that you know what you're signing, and that if there is something that is not clear, that we explain it to you. We will help you with the pre-transfer support. That means that we look at the transfer deed whenever that is drafted. And of course, if you need some assistance in booking the experts, like the technical experts or somebody else, we can always assist with that.
Saying
Andrew,
a bit
maybe
about
over
Viisi,
to you.
I think.
Yep.
Sure, thank you, Philippe. Something about Viisi. So we charge a fixed fee for the whole process. We'd like to be as transparent as the Expat Housing Network, which starts at, let's say, roughly 2,400 euros. Keep in mind that our fee is also tax deductible. So from this amount, you can get roughly €1,000 back from the tax authority. We're completely independent. So that means that we can choose out of all mortgage providers in the market. So these are not only banks, but it could also be daughter companies of banks, insurance companies, mortgage labels. So we choose out of all of them. Our fee also includes applying for life insurance or disability insurance, which is, of course, a very important risk, or some risks to keep in mind, of course, when you have such a large financial commitment. All our advisors are also university educated, and we also have an in-house acceptance team. So that means that we already have acceptance looking at all the documents before we send everything to the mortgage provider, which makes our work a bit more efficient. And then we also have some mortgage providers that due to this has given us like priority lanes, meaning that we can arrange the mortgage a bit sooner for you as well. And for us personally, it doesn't matter which mortgage provider we choose. For us, the most important thing is that we choose something that suits you the best.
Perfect, thank you. And then I believe we come already to the Q&A session. Ludo, maybe you can read some questions that we received in the meantime.
Yes, indeed. Thanks very much, everyone, for sending through the questions. Thanks, Philippe and Andrew, for the fantastic presentation. I will read out the names as well. Please excuse my pronunciation. We have a lot of internationals here, but I think the first one should be okay. First question is from Carolina. Many people apply for a new property. How does the selection process work? I think this is for you, Philippe.
Yeah. Well, as I said already, the selection process, it depends from project to project. So there are developers that say, okay, first come, first served. So if you are the first to subscribe, then you will be likely to be invited for the first as well to maybe put an offer on a certain apartment that you like in the project. But there are some other developers that say we just make a whole list, we finalize the list, and then we pick at random who we invite for the first interviews. So it is really depending on the project itself and the developer, how they arrange that and organize that.
Okay, perfect, thank you. Then I have a question for you, Andrew, also from Carolina. Do the mortgage conditions change if you apply for a new property versus an existing one?
Yeah, very good question. So with most mortgage providers, these conditions are the same. There are some mortgage providers that say, well, if you have new construction, we can offer you a longer offer validity to meet those suspensive conditions that I mentioned before. What is also good to mention is that with some mortgage providers, you can get a discount on the interest rate if you have energy label A, which is of course the case if you have new construction. So that's always something that we keep in mind when we compare the mortgage providers.
Cool, thank you. Then I have a question for you, Philippe, a question from Babu. What happens if the construction company doesn't deliver the property on the time that they said they would deliver? So if there is a delay in the process.
Yeah, if there is a delay in the process, of course, in the contract, there will be some clauses already that subscribe what happens at that moment. Normally, in first instance, it will happen that they need to pay you a penalty because they didn't finish in time. Of course, that delay cannot be indefinite. So at a certain moment, if it's really a big major problem, then you will go to court to try them to execute as fast as possible, or at a certain moment, if it doesn't work, to cancel the contract and maybe get some indemnities. But normally, in first instance, if they are just over the limit of the number of days where they needed to execute the works, then some penalties per day will apply for the days that they will not be able to deliver in time.
All right, clear, thank you. Then back to you, Andrew, with a question from Raquel, if I'm saying that correctly. Raquel asks, if I am not paying the project from a mortgage, but from my own pocket, do I still need to put that money in a building depot and pretty much have it there sit still and not being able to do anything with my funds? Or can I also just pay the invoices as if I'm holding my own building depot?
Yeah, good question. What you have to keep in mind is that the notary office will see what your own input is that is needed to finance this property. So that actually needs to be put in at the notary office. And then exactly, well, unfortunately, it will sit still till the money out of that construction deposit can be extracted. But we also see sometimes that some people say, well, with new construction, I will just take a mortgage for the purchase price, and any additional work I'd like to do out of my own pocket. So that's something that you could choose to do so. But you have to keep in mind, if there isn't a kitchen, for example, in it, then might be that mortgage providers might, well, let's say, force you to still put in an amount for the kitchen because they want to make sure that, well, you actually have a property that has a decent kitchen in it. if, let's say, for any reasons, after a few months, you cannot pay for your mortgage and they want to, well, kick you out. But that's really a worst case scenario.
All right. Clear. Thank you. I'm going to stick to you, Andrew, for the final question from Ellen. Maybe we talked about this already a little bit, but we can go a little bit more in depth. How does financing work when you already have a mortgage on an existing home and want to buy a new build?
Yeah, so one thing that mortgage providers will look at is that you're able to, well, actually cover your double housing costs. So normally what mortgage providers look at is see, well, do you have enough savings to cover the purchase cost and also 12 months worth of your mortgage that you have now. So it needs to be sure that you have these in savings. You can also take on a bridge loan on your current property because that actually means that your surplus value is actually still in your existing property, but you're now buying a new one. And then, of course, after you move in, you'd sell the other one and then repay that at once and have a nice surplus value. And then it's also possible to take on a bridge loan, which is actually a temporary loan on your surplus value till you sell your current property. So that's something that we can also have a look at. You can also pay some of the purchase costs out of that bridge loan. It might be an idea to have a telephonic appointment with one of our advisors to discuss this further.
Perfect, cool. Thanks very much. We did get one final question in the meantime. And that is a question from Carolina. It's for you, Philip. Do we have any kind of advantage if we are buying for the first time when it comes to a new build?
A real advantage buying for the first time, it doesn't really exist with no builds, I believe, until unless Andrew knows something in specific.
No, that's correct.
No.
Some people might argue that with existing construction, if you're below the 35 years and buy something below the 400K, that you can save on the transfer tax, but that is anyway not applicable if you buy new construction. So
yeah, indeed.
All right, cool. Thanks for that. So that was the final question.
Perfect. Okay. Thank you, Ludo. I'd like to thank everybody today, Ludo, Andrew, and also all of you participants, of course. If you are interested after this webinar to receive some more detailed information or you have some specific questions, then you can contact us, of course. You will receive a follow-up email and there you can directly link to the party where you like to have advice, or for the buying side, or for the financing side, or for the both, of course. So thank you for now. Thank you for being here. We wish you all a very good day. And we will hope to speak to you soon to buy a lot of new builds in the Netherlands and to finance them in the best possible way via Andrew. Thank you very much for now and talk to you later. Bye-bye.
Thank you all. Bye-bye.
Thank you. Bye-bye.